YouTube, what it do? Took two L's. Let's get right into it. So starting off the Monday, Red took a regular size, I guess full sized L on the first trade, and then took a half sized L on the second trade because the risk was, substantially greater. But let's get right into it. Now, first of all, you always know we got to take a look at the higher time frame analysis first. So 30-minute and 4-hour. Now, 4-hour, I've been saying we've been in a historic bull run, has been extremely bullish. And even when we've been getting these pullbacks, buyers have just been stepping up at these demands. And, we're not really starting to break beneath any actual lows, right? So here, 7,085 held beautifully. Here, 7,137 held beautifully. We're in a very strong uptrend. Now, the key is the 30-minute trend has also been our best friend lately because all we've been doing is waiting for, again, the 4 hours bullish. We're waiting for a 30-minute pullback into a demand, 5-minute structure shift, and we take long every single time to basically new all-time highs. I mean, that's what we've been doing for the past 2 months, and I've been very aggressive with my longs, and I'm going to show you what I mean by I've been aggressive with my longs here in a second when we pull up the tape. But since last Friday, we have been fairly bearish. What I mean by that is we're putting in consistent lower lows, lower highs, right? Even these moves up aren't seeing as much continuation. We did have some negative news come out regarding Iran. So we're back to a headlines-driven. I wouldn't say we're back to a headlines-driven market, but we don't have a lot of economic data dropping this week, so I wouldn't be surprised if we see an increase in headlines to kind of make up for that lack of, statistical volatility. So going into the day, obviously I'm still very bullish. I'm looking for longs, and I said that I'm going to keep being as aggressive as possible with my long entries until it stops working. Now, did it stop working? Well, not necessarily, but the adjustments I'm going to be making, we're going to go over in just a second. So the first setup we saw, we have some nice buying pre-market. Now keep in mind at the time, these auto levels were not here. I'll show you, actually let's turn them off for now. So nice buying pre-market. We had a auto demand level that was signaled out here that some of the students took long for a very nice trade. Off the open, we're kind of pumping. Then we tapped off VWAP, very nice VWAP bounce, come back up to the highs, and then we started to reject off the highs, got a pullback, put in a lower high. Now I'm leaning in, I'm looking for a long. Now, again, I'm not just looking for longs off of random places on, off the candlestick chart. I'm actually looking at the order flow and paying attention to the relationship between the aggressive participants and the passive participants. Now, one of the freest things that I've been doing at these all-time high conditions is once we've already identified significant buying pressure, and then I see price consolidating in between two passive offers, regardless of really what the range is. I mean, here was from the 50s to like the 35, so, not the worst. But when I see price consolidating in between these two passive offers, what I'll do is I'll look for a pullback to be able to take long near the bottom or near the middle of the entry to then play the breakout to the upside. Now, what we've been seeing happen in these all-time high conditions is that we'll get these ranges, but we don't actually get the retest once we fill this passive offer. We'll fill it and then just continue running. So what I've been doing to take advantage of these moves, because it's with, again, 5-minute structure, 30-minute structure, 4-hour bullish structure, right? It's just with the upside. I've been looking to get in near the middle and near the bottom, right? As long as I can have my stop loss at invalidation and look to take advantage of the bullish buying momentum, right? Well, here, what I did was, okay, we got a nice entry near the middle. We see buyers, sellers get exhausted at the bottom. Buyers start to step back up. And the large passive offer is sitting at the 35s. So where do I place my stop loss? Well, I place my stop loss a couple points. Here I had it at the 33s below that 35s offer. Why? Well, because the only other place to place it at is all the way down here at the 25s. But why would I place my stop loss at the 25s when there's no large passive offer sitting here? There's one at the 20s. So if I put it at the 25s, I'm just asking for it to get hit because it's going to go to the 20s. And the range that I'm playing, the breakout play that I'm playing, my 35s is my invalidation. So this is how, even when I take L's, I'm still minimizing my L's by using order flow. Like, I'm telling you, it is absolutely everything that's crucial. This stopped me from taking a double-sized loss. I mean, it would have been like 14 or 15 points. So I'm honestly very happy with that. Now, let's take a look at the second trade we tried to take. Yeah, second trade we tried to take. We get a bounce off of an auto demand level that got plotted at the 7404.25. Now, these things have been absolutely killer. As you can see, we literally tapped it low of day at the time that this was happening and then ran all the way back up to VWAP. We tried to get a rejection of VWAP, lower volume than the previous 5-minute candle, got that close above, then waited for another consolidation candle on the side. The kind of red flag looking back at this now is the lower volume on this candle that dropped at 10:55, or not drop, but close. The lower volume on the close, once we closed above VWAP, could have been a negative, indication for our position. However, we did have Trump news come out at 11, so it didn't really matter. We kind of got stopped out due to that. Again, our stop loss was at invalidation. It was a couple ticks beneath that 404.25 demand level. If we, get stopped out, we're no longer interested in the longs at that area, which, as you can see, thankfully we did. Again, the only other place you could have placed your stop at true invalidation would have been, beneath the 86s. But then you're running a 35-point stop, and who wants that? So again, even when I'm taking my losses, they're calculated. My stop loss is at invalidation. It's with my pre-market plan, which is the most important thing. Now, my pre-market plan gets sent out to my students. I actually make it live with them. So I hop on at 8:30 in the morning, 8:30 a.m. Eastern time, and I go through the news. I go through the ES and NQ current auto levels. I go over my ES, NQ, Apple, NVIDIA, right? Everything that I'm watching for the day, that gets sent out to them. Had a couple students today take no trades, had some green. Let's see. Ray, nice, building up those Apex accounts again. Vraj, killing it. Bit of a slower day for us. We typically try not to be as aggressive on No News Mondays, but market's been blessing me with longs. Now, what am I going to do moving forward? Because here's the important part. Well, as we start to slow down or maybe potentially shift higher time frame structure back to the downside, now we're still extremely bullish, but what goes up has got to come down. So as we see buyers not to be as aggressive, what I'll do is, as you can see here, when we're ranging like this and we filled this passive offer right here, and then we got a aggressive offer filled beneath it, this is actually a pretty decent short signal, because you get the aggressive fill on this passive participant, then you get a buyer's tried to step back up, but they instantly got wiped back down. Then you get aggressive offers hitting the tape beneath that passive offer, showing that, hey, sellers are still in control. And what do? They went straight from this passive offer all the way down to the next ones. So not going to instantly abandon team longs, but I will start to incorporate shorts back into my trades if we continue kind of this type of PA. But I will now simply just go back to waiting for those passive offers to either get retested at that same price level, or we just see what we saw here, to where it's, all right, passive offer gets filled, and then another aggressive offer hits the tape beneath or above it, depending if I'm long or shorts. So just waiting for that extra confirmation. And I mean, it's not like what I was doing before was wrong. No, I was just adapting to the market conditions. So I knew, hey, if we're ranging like this and we fill that passive offer above us, we're probably just going to continue running to like new all-time highs. So part of trading is adapting. But yeah, guys, one regular size L, one half size L. It's only Monday. Still plenty of time to make the week green. These market conditions have been truly, just blessing me with amazing trades. So I'm, got to pay my dues to the market somehow. But yeah, I will catch you guys tomorrow.